To find great capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy such as the Deferred Sales Trust, the best way to exit highly appreciated assets, tax deferred, so you can create, preserve, and grow your wealth. I'm your co-host, Pearson York, filling in for Brett Swarts. Each episode, I'm joined by some of the best wealth, business, leadership, and real estate individuals in the world, share ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Make sure to hit the like button, the subscribe button, and notification bell for the YouTube algorithm. We're streaming on Facebook as well. And I'm really excited about our next guest. We were chatting a little bit before the show, and it's a very creative story and how he got to where he is. I'll let him tell the bulk of it, but started off in the media space and then transferred now into more of the personal finance family office space. And so we're going to hear an awesome story and get some great value out of Joseph DeSanto. How you doing, Joe?
Hey, good, Pierce. How are you, man? Thanks for having me on.
Doing well. So, Joe,
Awesome.
Tell us a little bit about your story. How'd you get to where you are?
Yeah, let's see. Well, I was born in Providence, Rhode Island, in 1975. So I right now what I'm doing, as I mentioned to you, is and you kind of coined it well, is that I'm somewhat performing a bit of a family office service for my clients. I'm what I generally would say I'm a fractional CFO and business manager. And I essentially manage the funds and act in a CFO capacity for various small businesses, anywhere from 5 to 30 employees. Often the individuals are the owners of those businesses. But it's funny, the way I got into this, this was never my particular life plan. I was crazy enough to say a photography major in college, and I pursued basically the arts. But I was always interested in finance, both personal finance and business finance, and always wanted to own my own business. That was always part of my plan. Like as soon as I could own a business and buy real estate, that's what I was going to be doing. And I basically found a business that, married my business interests, of course, and also my photography and media interests, and ended up opening a post-production company in Los Angeles way back in 2006, and grew that with my partners over about 15 years, up to 35 or so employees on average. Though in some years when we were doing bigger projects, we had up to about 60 employees at one point. And it ended up being very successful. And I loved it. And I enjoyed being in the creative world. I kind of learned early on that my actual creative talents in terms being able to do great design and this and that were a little bit limited. Once you get into the realm of really talented people, you kind of learn that, wow, there's some people out there that can sit down and just churn out awesome designs all day long. They're just a never-ending wellspring of good good visual ideas. I could turn out a good idea maybe once a week, I feel so I kind of learned that I wasn't going to end up really being an artist per se in the business, but I, just naturally, I'm kind of a talkative person. I'm social and the side of the business that's good for that is being a producer or project manager. So I kind of went down that route, which led actually really quite well into, being a business owner. And I basically took on all the business, marketing, branding side of the business, but also ended up being the CFO, just because I was always interested in personal finance and kind of just taught myself how to be a good finance manager. And I did that honestly, just I started using Quicken back in the day, in college, just to try to manage my own finances. And using Quicken, amazingly, kind of just naturally educated me into how business finances work. And now I actually say to people, you need to run your personal financial life like a business. That's kind of one of the things that I say, to people I coach and on my website or whatever.
Yeah.
And so when my wife and I, we finally had a kid. I was 40 and like quickly realized that kids apparently take up like a ton of time, in your life. Like they literally like just overrun your life. So, and all of a sudden, like, I used to just work all the time. It was fun, go out after work, social events, all that. And like now all of a sudden we were just like rushing home and like we were just all super stressed about like caring for this kid and whatever. And after a couple of years, we were like, you know what? Maybe we should just like, I don't know, change our whole life and like just figure out a way to like work less. And luckily, because I had been interested in personal finance and worked so hard at like doing real estate and learning how to invest and kind of being my own little family office, basically being the go-between between my CPA and my attorney, who never seemed to want to like get on the same page on their own. We'd saved a lot of money and we put ourselves in a position to like have good, some passive income and possibly make this change of like working less. So we what I affectionately say now is we retreated to cheaper ground. We moved to Florida, like reduced our kind of overhead and got ourselves into a place where I could work part-time and, have a nice life, work part-time and have other income from our real estate and stuff like that.
Sweet.
And that's what we did. So I kind of call myself semi-retired now, in that we couldn't live the kind of lifestyle we would want on our current passive income, because we still have, investments brewing for future use. But with our existing passive income and a part-time effort, we can live a nice lifestyle that, we want. That includes all the things we want to do, travel, whatever, blah, blah, blah. And now we can do that. Like, our last 3 summers, we've traveled for 6 to 7 weeks,
Awesome.
Each summer. Like, actually, we kind of wanted to travel a lot more, but because we're like newbies at kids, and we literally were like surprised, like what it was going to take. We were like, did not calculate that once the kids started school, we couldn't really just travel at our leisure, Some people do that with their kids, like world traveling, and they go on RVs for years at a time. I would never want to be in an RV like with my kid permanently. So we don't travel throughout the school year, but we've been able to live like a more, chill life. So naturally, when I left, as I said, like my partners, they weren't psyched about me leaving, but ultimately they were supportive. They kind of cashed me out. But because I was the only guy who had done the finances for so long, they were like, well, what if we pay you just to do the finances? Like you can do it from wherever. And I was like, yeah, that sounds good. Because I didn't have an exact plan set up for the part-time income. And that just kicked off this new thing. Like I started telling other friends that own businesses that I was doing that. And they were like, wow, you're doing that now? Like, will you do that for me? Because we really need someone. And I started to see that like businesses that, one, like don't have a partner that's good at finance or is like the business side, and two, aren't big enough to afford like a CFO, like a full-time CFO. They really have this gap. They just don't have anyone like to go to make good financial decisions. They're not good at managing their money. They're not like, extracting the data they need out of their bookkeeping. Maybe they have like a cheap bookkeeper, but that person can't really give them good information. And they also don't know how to do long-term planning for their own financial future. They don't know how to use real estate to their benefit. They don't know like, how to invest well. Like they're good at doing design, like they're like high level creative people working super hard, making great money, but they're not like making the most of the money they're making. So I also started to see that, as the business owners of these businesses I was helping, they as people just, needed help with their personal finances. So I kind of extended it, what I'm doing for them into their whole personal finances. And like, I manage all like their personal finances. I'm not a licensed financial advisor, CPA, or attorney. So there's limits to, the information I can give them, but I basically guide them through the best moves to make, at least in my experience. And then I kind of act as like a go-between, honestly, between like an attorney and a CPA and, a financial advisor, and give them the unbiased, like third party opinion. And, a la, as you said, sort of a bit of a financial office operation for them.
Awesome. incredible story. You know, I love the fact that the kid kind of threw a wrench into your
Yeah,
your
just totally mucked up the situation.
I have three, so I know exactly what
Wow.
you're talking about, you know, and it's just like, you know, you don't account for things all of a sudden, you know, like
24-hour surveillance was like completely blew my mind. I was like, wait, so like every minute of the day, either we have to be looking at this thing or paying somebody to look at it.
yeah, no,
Crazy.
it's nuts. They'll throw a wrench big time into
Yeah.
the plan. So I mean, I love how you guys were going out and, you know, figuring out how to spend more time with the family. Like that's shouldn't be working 24/7. But so I want to dive into some of the stuff that you said. So and real quick, just before we go, what do you think is like one or two strengths or spiritual gifts that you have that have led you to be successful?
Well, I was both blessed and burdened with being like OCD-ish, basically. So I've put that to really good use in my life. Like once I get hooked on to like something like an idea, a project, a plan, like I almost just can't stop until it completed. And that can be a burden at sometimes.
Yeah.
But actually in the sense of productivity, it's actually pretty awesome. So I was really good at like getting ideas started, getting stuff off the ground. I'm super self-motivated. Like I like actually both building things physically, like worked on building out both of the buildings we bought for our business. I did all the designs myself. I sat in and even did a lot of like the superintendent stuff, manage lots of subs. Like I know how to build stuff, but I also like to like model things out in spreadsheets and like make sure the plan's going to work and try to figure it all out. And it's funny, like I have these courses now on my website of all my and there's kind of three courses, and they encompass my methodologies of how I've gone about like finding success doing things. And it's like all these spreadsheets that I made for myself that were very handy and like helped me model out my ideas and plans. Like I sell them in my courses now. I'm like, wow, these things are pretty handy. Like maybe somebody else could actually take
Yeah.
advantage of this stuff. So it's I guess like my detail orientation, a little bit of obsessiveness, and like I'm relatively creative. I've been called a creative soul in the past versus like someone who like makes their living just actually being creative solely. So it's been a good mix for me.
Yeah, absolutely. Well, it sounds like it's a lethal combination there when you're
I like to
productive
think so.
and creative. Like it's hard to find someone who can actually bring their own visions to life.
Oh, well,
You know?
thanks. Appreciate you
So
saying that.
that's a good trait to have. All right, so let's dive into this then. What's the number one secret to managing your finances effectively?
As silly as it sounds, I think the linchpin is bookkeeping. It's as simple as that. Now, obviously, well, actually, I shouldn't say it's as simple as that, but it's like the fundamental thing that you need to do to like have all the information you need to like make a good plan. And like I always say to people, I think I mentioned this already, you should treat your personal finances like a business. And when I say that, think about it. It's like if you had a business or you're talking to your friend who had a business and you were like asking them like, about how do you manage the finances, whatever. And they were like, oh, we don't do bookkeeping or anything for the business. It's like too boring. So I don't really know how we do as a business exactly, but I know I enjoy it, and I don't know that I don't always get a paycheck. I know that. I'm not really sure why, but sometimes I do, sometimes I don't. Well, that would just be ridiculous, right? You'd be like, how do you run your business and not actually like know how much money you make, how much you spend, how much profit you're making? Like what's good revenue? What's revenue maybe you should cut loose because it's not profitable? All the important questions. Well, if you don't do bookkeeping, you can't answer those questions and you can't make good educated decisions going forward. So I say to people, you got to do bookkeeping for your personal life too. It's not that different than a business. It's like you have money in, you have money out. The net profit is your annual savings. And if you don't know what your annual savings is, you don't know if you're saving enough. You don't know if what your savings is going to get you to where you need to be. and all those things. So I say it's really important. I think of it as like exercise. It's one of those things a lot of people don't want to do, but unfortunately, it's really good for you. And if you don't do it, you will likely suffer some consequence.
That makes sense. Okay, so how do you then, how do you get good at bookkeeping, or how do you go about doing that?
Well, it's like, again, exercise. You just have to do it. The good thing about the difference with bookkeeping and exercise is you can't pay someone else to exercise for you and have it actually like improve your body. You can pay someone else to do bookkeeping for you, as it turns out, and just like give you the information you need, and help you make decisions. Obviously not, depending on your income level, you might not want to do that, but ultimately it's just a matter of doing it. You use some computer software. You don't do it like on paper. You don't do it in like a spreadsheet. You need something that you can put the data in and then pull a report and say, okay, this is where I'm at. So for personal finances, when I manage people's personal stuff, I use Quicken personally. I'm not affiliated with them, but I find it's what I've always used. And you can combine everything in there. I manage my real estate in there. Like, I mean, I could tell you what I spent on laundry in like 1999 if you wanted. But for businesses, small businesses, mostly it's going to be QuickBooks or FreshBooks or whatever. But it's basically just using software, to track all this data. And then, of course, the tracking itself is tedious, for most, but it's the information you get from it that is just so important, And I do say sometimes, there are some people that can out earn the need to do this. Like, you just make so much money that, having some waste in your system just doesn't matter. That's pretty rare, in my opinion, number one. Number two, if you do it, you're gonna save more than you would have otherwise, no question about it. And number three, what I've learned is you'd be surprised, no matter how much money you make, you can find ways to spend it all.
That's the truth.
You could be making $1 million a year and still be losing money every year because you got 16 boats and 4 ski-doos and 5 houses and what have you. And you're not like getting closer to financial independence,
Right.
And what I can always say is whatever you're making today, there will be a time in the future, most likely, where that income potential will be reduced, so you got to make the most of what you're making today. So I think you pretty much anybody is going to benefit from it. And, the mega rich, they keep track of their money. They just pay a whole team called the family office to do it.
Right.
You know what I mean?
Of course.
If you don't make millions, well, you might have to do it yourself,
Gotcha.
Or you could not and suffer the consequences
and stay stagnant, right?
Exactly.
And don't move. Interesting. Okay. You mentioned you got real estate. So tell me about that. What kind of real estate? What are you going after? What are you buying? What are you selling? What?
Yeah. So I just, I was always wanted to own my own house. So I started there. Some people say your house is not a real estate investment. I think that's wrong. All of mine I've treated as, and they've all paid off really well. But after buying my first house, I just was like, I could see the benefits of being able to borrow out of it. I borrowed out of my house to start the business, all these things. So I'm like, I think I'm going to stick to real estate for my investing more so than the markets. So we started buying single family rentals, my wife and I. I think we've transacted and owned about 16 properties over the last, 15 years. 2 of those were commercial buildings for our business, like much like buying your own house, which I, think is a great thing to do. When we were renting for our business, we needed to get a new, bigger space. And I went looking out, for space. And most of the time I kind of quickly learned like, oh, you rent a space for your business and it's like unfinished and you have to like spend all this money to like build it out. And obviously that, makes me sound naive at the time. I guess I was. And, I was saying to these guys, like, so like, are they going to pay for to build it out? Cause I can't use it like this. And they're like, no, man, you have to pay for it. I'm like, well, why would I spend $1 million, gussying up someone else's building? And they're like, I don't know. That's kind of what, people do most of the time. And I'm like, I think I'm just going to buy my own building and I'm going to renovate it and I'm going to capture all the value of that. So that's what we did. And we ended up doing it twice. And it's kind of like buying your residence, but for your business, and, much like with first-time home ownership, where you have ability to get into lower down payments and this, that, and the other, if you own your business, the small SBA offers you some attractive lending options for getting into commercial property and stuff like that if you're going to use it. So we kind of added those to the pile of the real estate that we owned, and that really paid off significantly for us. I mean, I'm the beneficiary of a bull real estate market, no question about it. But I started buying stuff in 2004. So I went through, the Great Recession, but I lived in my house. It didn't bother me. I kept getting my rents. Luckily, it didn't really cause an issue. So I think real estate ultimately, provides a better return at lower risk, than the market. So, yeah. But recently, I will say that we were about, I focused a little bit more on asset allocation in the last couple of years, and trying to figure out the best setup for that, especially as I'm trying to generate more income. And we were about 75% in real estate, really, of our total net worth. So I wanted to trim that back. Yeah. And I kind of started selling some properties because the market was so hot. And it's funny that you guys do, the capital gains. I wish I had ended up on the show probably, a year ago, but managed to we did a cost segregation study on our building, which kind of helped me out in the capital gains department, which was good. And I kind of started holding that cash, thinking that the market was going to come down. I was holding it though in 2021 as the market kept going up. So I'm like, God. But obviously we hit 2022 and all those gains sort of evaporated. So I've been putting some of that real estate equity they had back into the markets. So hopefully that'll work out in the long run. And then I also decided the single family rental thing, I did good on the appreciation front, but the cash flow is very hit or miss in reality. And it's not very scalable, as most people who know real estate know. But so I took some of that equity too, and I kept it in real estate. I just started to do some different syndications that were more yield oriented syndications and are producing, much more predictable cash flow, at least so far. So I've trimmed down the actual real estate holdings, I think from a height of 10 at one time down to 3. And I've put a lot of that equity in the markets or other real estate syndications now.
So you're going to a more passive approach where they're bigger deals, maybe some multifamily syndications or, shopping malls or whatever the case is, catching some of the
exactly. I think the deals I'm in are flex industrial one's corporate park, a tech oriented corporate office park. One is retail. And then, some large multifamily residential.
Yeah, interesting. Okay, and you mentioned that you wish you were on the show about a year ago because you had a little bit of a tax problem, but use a cost seg study to kind of offset that. So, speak to that a little bit. Tell us about the tax situation. How have you handled that?
Yeah, well, I mean, basically what was happening was I was selling these properties and I turned over a handful of the single family rentals throughout those years. I started with my first rental in Austin, and that was 2007, 2010. And they were good, but Austin, turned out, I learned along the way, Austin, unfortunately, their property tax is incredibly high. They reassess property values every year. So as Austin just was blowing up, my property taxes are just outpacing my ability to increase rents. So I ended up selling. I did some 1031 exchanges, bought into some smaller markets, blah, blah, blah. But then I wanted to sell and not do the exchanges. I wanted to pocket the cash. And so again, I would always do my own research and try to figure out what can I learn? I read books about taxes, whatever. And then I go to my CPA and I'm like, what do you think about this? And then usually I go, why didn't you bring this up? You're the CPA. I look at CPAs almost like doctors. If it's your health, you're having a health problem, you go to the doctor and they just tell you something and you're like, well, I could just take that, or maybe I should go get a second opinion just in case, because what if they're wrong? I mean, they're just a human being after all. And that's kind of how CPAs are. They're just humans, and they're drowning in tax returns. So, you got to be a squeaky wheel, I find, but I do like my CPA.
Definitely.
So I kind of like learned about the cost seg study and how I could go back. I didn't know about it when we bought the building, but I was like, oh, I can go back and recapture a whole bunch of bonus depreciation, and it was a pretty sizable deal on our last building. So we went back and captured a bunch of bonus depreciation, and I could obviously use some of that depreciation to offset other real estate activity, because it doesn't offset my personal income, obviously, but it does offset other real estate activities. So I was able to, address some of the capital gains stuff that way, and it was, I was happy with it. I'm sure there's other strategies, what you mentioned, that you guys do. That was news to me. I don't know what those kinds of trusts are, so I was eager to learn, actually.
Yeah, well, that's a good segue in. So, that is kind of like our main niche. Is what we do is we do at its core, it's a seller carryback, IRC code 453, partner with a business trust. And basically what we're doing is we're selling an asset, any asset. It could be a business, it could be stock, it could be real estate, it could be a primary home. It could be art, one of your creative designers over there, right, paints a picture of Picasso, or something like that. And
one of my clients has a lot of art, actually, so this would be valuable information for him.
Yeah. So essentially what ends up happening is right, you line up your buyer, you sell the asset. You have to have a liquidity event, right? You got to sell something. Mm-hmm. So you sell it, right? If it's highly appreciated, what ends up happening is you sell it to this trust first. Let's say, we'll just use super easy numbers, right? Let's say you bought your building for $1 million, right? And you're going to sell it for $5 million. You got a $4 million gain. So you sell your asset to the trust for $5 million. They turn around, they sell it to the ultimate buyer for $5 million. And then the buyer funds the trust with cash or financing, however they're going to do it. We don't actually care immediately. And then they take title, right, of the property, and dust settles. We're left with the cash. And then we turn around and write you a note for that $4 million, right, after we pay off the debt at a certain percentage return. Typically, they're structured between 6 to 8%, depending upon your risk tolerance and all that kind of stuff, net of all the fees and stuff like that. And then you can basically kind of direct those funds to be reinvested in whatever you want. So you can say, okay, like I want to invest 20% into liquid grade securities. I want to invest, 5% into Bitcoin. I want to invest, 30% in, this real estate syndication deal. And, I want to keep 40% in cash for whatever, maybe some bonds or something. I don't know, whatever you want. It doesn't matter.
Sure.
And it's super flexible. So you can call us up and be like, hey, you know what? I found this fantastic real estate deal. Let's go into it. So
wait, who is the beneficiary of the trust?
So the beneficiary are you guys. And as the trust itself is an unrelated third-party trustee that owes you a note. So you're the note holder. And so with that means that you can start receiving like cash, like distributions if you want, payments, or you can let it compound, or you can say, hey, I want to invest in this business or whatever. So, and then if you were to, when you pass, right, your kids can step in.
Got it. So you can kind of use the trust almost as a little bit of a bank in a way, I guess you might say. Like you don't have the money in your bank account, but you have control of the funds within the trust to do various things with.
Okay, so yeah, I would say this is not legally like how it is, but it's like conceptually, right? It's almost like you 1031 into a self-directed IRA.
Got it. Okay.
So now you're able to take those funds and go, but the difference is that you're able to like pull those funds when you want. You can take, interest earned. So like on a property that you are, let's say you're Airbnb it for like, and you're making 125 grand, right? And it's a $5 million property. $1 million on it. If you turn around, right, and you sell that asset and you pay off all the debt, you put that $4 million in the bank at an 8% preferred rate of return, you're going to make $320,000 a year just on the interest alone.
Mm-hmm.
So you could take that 320, over 12 months, you could take it over 6 months, you could take it, you could leave it in there, you could take 100 of it. It doesn't matter. You can do whatever you want. So like a good story is, we had a gentleman who sold a business, for about 600,000 in tax, sold the business for about 2.6 million. He turned around and he put that into a real estate development deal in Tennessee, building 72 units. That's what he wanted. And he put some of it into some securities. But you don't have time constraints like you do with a 1031. You don't have like kind constraints like you do with a 1031. So you could sell and just basically hold in cash until you find the right deal.
So to make the 1031 analogy, which is a good one, the trust ends up kind of like being the new property you're going into. But instead of it being just an actual like kind property, that it's like the trust is a more flexible holding tank. So you don't have to actually pay tax on the gains, but you do have to kind of keep it in the trust and reinvest it in other things from the trust.
Yeah, it's
pretty cool.
Invested in everything that you would invest it in from your personal finances.
Right. Yeah.
Right. There's no restrictions on that. The restrictions are you can't use it to buy personal stuff.
Right.
So you can't use it to buy a personal home or a primary residence that you're going to be living in and using, or a Ferrari or a boat. Now, if you can come up with a creative solution as to say, you know what, I'm going to buy 3 Ferraris and those Ferraris we're going to rent out on Turo.
Right.
Now you got a business.
Sure.
Now, right, you can justify it. Or, hey, I'm going to actually do chartering services with this new big boat that I'm going to buy. Right. Or this airplane or whatever it is. Right. Like, you can justify it with legit like business revenue.
Right.
It's a business.
Okay. But you can actually be involved in the business, whereas something like, a self-directed IRA, you can invest in a business, but you can't actually be a participant in that business. Right.
Yeah. So we had a lady who she bought Bitcoin for 50 grand and it went up to 50 million.
Wow.
Kind of thing.
Wow.
This is back when it was 68,000, so it's dropped a little bit, but she sold it when it was 54. She sold 5 million worth of Bitcoin at 54,000. Heard about 1.85 million in tax. And she took that tax savings, that 1.85 million, and she put it into a business that her and her roommate from college wanted to start, which is like an online training thing for like kids in India or something like that.
Wow.
I don't know the exact but it's a teaching business.
Yeah. Wow. That's interesting.
It's super cool.
What if, trying to think, yeah, I don't want to overtake the show with questions, but maybe I probably have some additional questions and specific scenarios to run by from some of my clients' needs that potentially this could be helpful for. But that's really fascinating. Wow. That's awesome, man. Very cool stuff. How'd you get into this?
I met Brett Swarts about 8 years ago, and he kind of told me about it, and I was just like, this is awesome. So once you get it, right, it changes the way you look at every investment. Because if I know I don't have to worry about paying the tax on this thing, then I'm not gonna worry about having to go find an up leg on a 1031 or having to do a traditional carryback or a charitable trust. Like, I just know, like, look, I can defer all the tax on this, and then I can use all those proceeds to reinvest. And I'm
honestly, I wish I knew it when we sold our first building.
Yeah,
we had a pretty big capital gain, and I wanted to 1031 it. I would have, because I knew we were going to buy another building. But I just, like finding the right building takes time, like if you're going to use it yourself, right? So I couldn't find one in time. And basically we all had to take the capital gains tax hit. I mean, it still worked out because we made a lot of money. we pocketed half, we put the other half into down payment for the new building, and it was a win all around. But if I could have done that, God, I probably would have saved hundreds of thousands of dollars in taxes that we all ended up personally paying from the sale. That's too bad.
Yeah.
Actually, I'm 8 years too late in meeting you, as it turns out, I guess.
No, and that's all right. You can keep it for the future. So
yeah, I'm sure it'll come in handy for sure. And honestly, like, knowing these things is kind of like what I try to provide. Now, am I the most educated and whatever? Absolutely not. Most people that know me and that I work with, they know I've gathered just this info from my own knowledge, research, interest, or whatever. But there's always stuff to learn, and like pretty much, I'm like Cliff Notes for them on anything finance related. If I've read it and I get it, like I pass that information on to my clients. And this is like a perfect example of something that none of them would ever know.
No.
And will inevitably probably come in handy and save them a bunch of money.
For sure. So, and that kind of goes back to your CPA story, right? Where you kind of go, I can't tell you how many times I've heard like, oh, well, why doesn't my CPA know about this?
Right.
And it's like, well, honestly, like these are big like events that are relatively rare. And they're not tax strategists. They're CPAs. They put numbers on the spreadsheet and then they submit it to the government.
Yeah, that's what like your general practitioner at the doctor doesn't know like that you have a heart valve problem because they're not heart specialists, right. Like they're not that educated in hearts. They're educated in basic stuff,
Yeah.
And I would say like, most CPAs, if they're making their firm's living on tax returns, you have to do a boatload of tax returns to make decent money, right? So like my CPA, I think they do over 1,000 tax returns a year at least. Imagine trying to get through all those tax returns and then also give like personal service, understands everybody's individual tax needs, knows some niche stuff, get there in time. It just doesn't happen. Like it just doesn't happen with, your regular CPA. So you got to be your own advocate when it comes to your finances. You know what I mean? Yep. You really do. So that's what I'm doing. I'm trying to be that advocate for my clients as best as I can.
Yeah. Interesting. Cool. All right. Well, Joe, we're running out of time here. So where can people find you?
You go to my website, playlouder.com. My slogan is work smarter, plan better, play louder, work hard and then try to have some fun in life. And a lot of what the information I give to my clients is ultimately there for free amongst my many blog articles that I've written. But that takes a lot of time to read. So if you want condensed versions I kind of have 3 pillars. It's like small business, personal finance, and investing. If you want sort of a condensed or more curated track, I have some courses there that you can buy that sort of drill down on the most important stuff. So you can check those out. And then, inevitably, if you're like, I just don't want to do it, I need someone to do it for me, you can hit me up via email.
Awesome. Okay. So playlouder.com.
That's it.
Awesome. And you guys can find out more about the Deferred Sales Trust by going to capitalgainstaxsolutions.com. We also have a mastermind every Friday, 10 a.m. Pacific, 1 p.m. Eastern that you can come to, bring your questions, bring your CPAs and your tax attorneys. Hopefully they'll meet there and they'll talk there. Right.
Yeah. I will send my CPA that info.
Yeah. And get on there and learn how to do this and what it can be used for, what it can't be used for, and all that good stuff. So that's capitalgainstaxsolutions.com, and make sure to sign up for the mastermind. Joe, any parting words?
I guess my parting words is don't wait to start planning for your future. It's coming and you need to be prepared.
Awesome. Yeah. Start now, right?
Start now.
So all right, cool. All right. Well, thanks, Joe, for coming on. Really appreciate it and all the value you got. Thanks, everybody, for listening to another episode of the Capital Gains Tax Solutions Podcast, where, as always, we believe most high net worth individuals and those who help them struggle with clarifying capital gains tax deferral options, not having clear plans is the enemy. Using a proven tax deferral strategy, such as the Deferred Sales Trust, the best way to exit highly appreciated assets, tax deferreds you create, preserve, and grow your wealth. Please rate, review, subscribe, like, comment, post, repost, share, tweet, all those things for the interweb algorithms that are out there we don't even know about anymore. Just do all the things that
Just give your kids the link and let them do
it. Just figure it out. But really helps us out, so we really appreciate it. So thanks everybody for listening, and we'll catch you